Good afternoon, traders. Thomas DeLello here. I want to review a quick tip with everyone here today. It's a method that we use in order to help us identify conservative trade entry location as well as tight risk parameters. And you know, the way that we look at the market and think about the market, our perspective, there's a fundamental underlying structure to any market that's dynamic. It's changing from moment to moment. It's developing minute to minute as the trade day develops. And developing an understanding of these changes in the structure to the market and applying that knowledge consistently is what ultimately will help you make your trading really reach its full potential. Much more than regular plain vanilla technical analysis. Now, what we do in our trading is our goal is always to create a frame of reference, and we have what we call our order flow dashboard. And in our frame of reference, we're trying to create reference points based on two things. Number one, wholesale and retail value in the market, and order flow inventory levels that develop in the market. And we're not going to get into the order flow inventory levels today. It's a quick little video. What we're going to focus on today is showing you how we look to buy a pullback in a market where we've identified a bullish bias. And again, we're going to use a zone, what we call a value transition zone, to identify a trade location that we're going to look to buy a pullback into, and also identify very tight risk parameters. Now, the zone that we're talking about occurred yesterday. Yesterday morning, we had a bullish bias. Anybody that was trading along with us yesterday, we had a bullish bias all morning, and we were looking for opportunities in the morning for the market to bottom out. And aggressive traders could have been looking to get in here in front of the way of this vertical development to the downside. And we had clues telling us that the market was undergoing a change to the structure. But again, we like to point out conservative trade entries as well as the aggressive trade entries. So someone that had a long bias yesterday we could have had some aggressive traders looking to step in front of the vertical development to the downside. In other words, the market's still pushing, making lower lows. Someone who's more aggressive doesn't mind getting in front of that because they're picking up on clues in the order flow, which we're not going to get into right now. But then we have conservative traders who are looking at the same clues, who just don't want to step in front of that vertical development. They want to wait for a buy response, and they want to be able to identify an area where they could look to buy a pullback. Well, what we do is create what we call a value transition zone. And what we look for is the market to stop the vertical development to the downside. We look for a buy response to set in. And I just want to color this blue real quick, make this stand out, for demand below the market, supply above the market. And then what we do as the market pulls up out of this zone, we're looking to buy pullbacks into this zone. And you'll see here we had several opportunities to hop in here to the long side. Here, here, here. And again, we had supporting conditions in the order flow that we're not going to get into. But in this situation here, we're able to look to get long as the market's coming into our zone, put stops below the zone. If the market breaches the zone, we're out. You see here how the market reacted off the top of the zone. Very clean type of entry, identifying good trade location, not taking any heat on the trade, and also being able to identify tight risk parameters. Always two important aspects of a potentially rewarding trade with well-defined risk parameters. All right, guys, have a great weekend, everybody. Till next video, we'll see everybody soon.